Good morning, everybody. It's 24th of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. Right.
Yeah, I'm not bad, thanks. How are you?
Pretty good. Pretty good.
Nice to hear. All fun and games again on the markets yesterday and today. I'm sure we'll come on to it shortly, but I noticed the equity indices were setting up nicely for our chat with their their nice reversal candles that we keep seeing at 8 o'clock in the morning.
Yeah, the
Or
European
9 o'clock in the morning.
sentiment wave. Yeah.
Anyway, I'll come on to that shortly. Just sort of run through the headlines first up. So yesterday we saw oil decline by about 6%, and that was worries over more social restrictions hitting Europe, and obviously that having a knock-on effect on demand. Prices are steady today after briefly trimming the decline. I don't know if you've seen this, Steve, but there's a 400-metre long container ship that's become wedged lengthways across the Suez Canal.
Yeah, I saw that. I was just reading that just before we sort of like joined up.
It's fantastic. Let me see if I can get this picture up.
I know it's pretty enormous, isn't it? Big old ship.
Yeah.
It was blown off course by the wind, apparently.
Oh,
I mean,
right. Okay.
if you see the amount of containers on it, you wouldn't believe that it sort of is able to float. Never mind get blown off course.
No, it's
But
pretty
yeah,
fascinating. Let me
yeah.
just share my screen quickly.
I just saw a video of it, of the
There we go.
ship
I know it's
skewing
not
behind.
very.
Yeah.
Yeah. It's just
There's a video released of just everyone, all these container ships just queuing up, waiting to get in. But I mean, that's pretty blocked, isn't it? You couldn't really sneak past, could you?
No, there's someone trying to sneak past down there, is there maybe? Or someone
I
trying to
don't
dig it
know.
out. It's the tiny little digger trying to dig it out. Oh,
I mean,
wow.
that is scary, isn't it? Wow.
Yeah. So obviously Suez Canal is a very big deal when it comes to oil delivery. It's the busiest maritime trade route in the world, so it's caused about 100 vessels to pile up either side of it, I think. Yeah, we've also seen on the equity front, GameStop slumped by 15% in after-hours trading yesterday. Missed estimates on the sales front. Don't think that's a massive surprise, is it really? I mean, it's just been
No.
dragged higher by people pushing it higher on a short squeeze. But they've obviously got this activist investor involved now, and his plan is obviously to turn the bricks and mortar chain into an e-commerce powerhouse. So we'll wait and see what happens with that. In terms of AstraZeneca, obviously continues to be in the news. They're going to release up-to-date results from the final stages of its trial of its vaccine after responding to criticism from a US science agency. Doesn't really have any effect on the share price. I think that may be due to the fact that it's a non-for-profit initiative on the vaccine, so shouldn't really impact on sales or revenues, but maybe from a reputational standpoint more so. But we'll wait and see what comes of that. Obviously, they've managed to bat away everything so far, and has got the backing of most places. So we'll see what happens. We've also got the Treasury yields yesterday. They slid for a second day after Federal Reserve Chair Jerome Powell played down the risks that economic growth would spur unwanted inflation. Government and corporate bonds around the world are having their worst start to the year since 1999 in a price sense. Obviously, the yields are rising and they've got an inverse relationship. On to what's going on with the equity markets. I think we'll start there, Steve, because they're on a bit of a tear. And obviously, we've seemed to have noticed this theme, well, at least for the last 3 trading days, that at this time each morning, we're getting some pretty substantial reversals take place.
Yeah, I mean, really, I suppose we could if we can bring a volume indicator into there, will that help us? No, it didn't seem to help on that chart. Yeah, we're seeing this at like 8 o'clock, and again, it's happened today. Obviously, the official
fade it into the cloud is a play then, isn't it?
Yeah, it looks like it. On the hourly chart, short-term play is you're looking to sell it around about the 6,700 level this morning. And maybe look for another pullback to 66.52. I think this is building up as a bit of a supportive level, 66.47 on this chart to be exact. Break of there could extend the move lower. On the DAX, we're seeing 14,500 and I'll call it 13. It actually says 15. But yeah, another bullish hammer posted this morning, and the buyers are come in. So from 8 o'clock, that's the official open of the stock markets. So that's why we're seeing that sort of price action, but obviously a bit unusual to see it every morning at the same time. But I think as sort of trading systems become more automated, that's how it rolls. Nice candle on the CAC as well. That's sort of like completely
I got
engulfed
sucked into that one yesterday on the
Yeah,
going to the head, and that didn't work out. Maybe
No,
I need to
I
fade
think
them today.
Yeah, maybe. Dow Jones has seen the same thing. Nasdaq.
Is there any news out today? I mean, there wasn't really the last few days, was there?
No, I mean the only thing sort of I'm seeing is the potential standoff between the EU and the rest of the world in terms of exporting the vaccines. Obviously, the AstraZeneca vaccine manufactured in Europe, but the Europeans, von der Leyen is
manufacturing numbers out by the looks of things, which may have impacted it.
Right, von der Leyen's obviously got the massive hump because they're exporting more vaccines than they're consuming, and so she's making a stand. There's a New York Times piece out this morning saying that they're going to restrict the export of the vaccines. So it's like taking it to that step. That obviously has a knock-on effect because the actual vaccines themselves are made up of about 80 components, or something like that. I think 80 components are from about 250 countries around the world or something. It's the facts that was being I was reading this morning were saying that obviously if the European Union decide to restrict the export of the vaccine, then there could be a bit of tit for tat. Obviously, we know that the UK supplies some lipids, but they get more supplies from everywhere. So, yeah, it's going to have a bit of a trade war effect on the actual vaccine, which a delay in the vaccine costs lives. So that's not a good road to go down.
No, they'd be charged for
blame
manslaughter, won't they? Someone at the top.
Well, potentially, yeah. You've got to think about it. Not all the EU are up for it. I saw the Irish ministers on the wires being interviewed by RTE this morning and or last night, and he was completely against what von der Leyen was going to do. So it's going to cause a lot of hostility. So that could play out. I suppose the only thing I sort of see on the hourly perspective, we've seen a little bit of an uplift in the tech stocks, and they're above the hourly Ichimoku cloud. So that looks a bit more positive, which we haven't seen that for a while. Obviously, the Dow and the S&Ps are still under the hourly cloud.
Looks like a big old top there.
Yeah, does, doesn't it?
Top.
Yeah, definitely sort of doesn't look great for the indices, but we seem to have this 8 o'clock euphoria. I don't know what it is. I've been looking at oil this morning, really on a longer term chart, and really again highlighting this hanging man reversal formation that we've seen moving into this quite solid resistance level, which we can go back to 2018, which it acted as a resistance, and during that year acted as support a couple of times, and then acted as a resistance in April 19 and January 20, and we seem to have been captured by that resistance again, and prices are moving lower. Obviously, we've got the lockdown extending again in Europe, a third lockdown in some of the countries, and that could lead to less of a demand for oil. And there's, I think the US oil supplies are oversupplied at the moment, so we're seeing a little bit of a retracement in that. That's the weekly chart. The daily chart has seen a top form, a little bit of a head and shoulders formation. We've seen a little bit of an uplift this morning, but I think we're going to run into some resistance on the 4-hour chart again, up around about these, well, anywhere from the hourly chart showed it better, this short-term downtrend. So we're going to see resistance come in at the previous support levels around about 59.50 and above. So yeah, looks pretty capped, I think, on the oil front, although I am still bullish over the medium term. On gold, obviously I'm bullish of this long term, but we've seen a reversal over the last couple of weeks. On the 4-hour chart, we are testing support around about a supposed neckline from this inverse head and shoulders formation. This is quite key to hold. Holding above 1720 is needed for this gold to then extend higher, and the potential upswing obviously will first target 1755, and then above that we've got the 1800, 1815 level. Yeah, so that's pretty much it from the commodities and the indices for me.
Cool, thanks, Steve. So over to FX then. So start off with the baskets as we always do, and as you can see right at the top there, we've got the dollar index, which at the moment is pretty rampant. It continues to move higher. And is looking pretty strong, which we'll come on to the individual chart for that shortly. Also, what we can see from this chart is these sort of riskier currencies that have just been absolutely hammered, and none more so than the New Zealand dollar. Obviously, we talked yesterday about the reasons behind that. It was caused by the curbing of speculative interest in property. So there's been some measures put in place in New Zealand to try and halt that, and that's obviously had quite a significant effect on the currency, and we're seeing a pretty sharp sell-off on that, and we've also seen the Aussie dollar drag lower too. The Swiss franc still can't grab a break, typically viewed as a safe haven, but it's looking really poor. Obviously, measures in place by the central bank there are having a weakening effect, and that's not changing. Sterling's also dipped lower, as too has the Canadian dollar. So really everything falling against the US dollar today. If we look at what the US dollar looks like on a standalone basis, quite interesting, I think, because we're approaching or have approached this 92.50 level, which was the swing high that we posted on the 9th of March. Now, we're below it at the moment. We did have a little bit of a look above it earlier today, but clearly that's acting as a little bit of resistance on the first attempt. So I'm more of the opinion that we are going to see that break maybe, but it may take a little while. We may see a little bit of a consolidation back in the short term. But overall, I think the outlook for dollar index in the short term is looking pretty good from a technical standpoint. And if we can get a break above this level on a closing basis, then it brings these targets into play up here, which I've got a band of sort of resistance levels around here, which comes in between 9400 up to 9465. So that would be my sort of immediate target area on dollar index over the short term. Elsewhere, if we look at euro dollar, obviously what we get with that is typically an inverse chart setup compared to the dollar index. And as you can see here, we're breaking down below this swing low that we saw on the 9th of March, taking out this support as it stands at the moment at 118.35. We are below it at the moment. If we get a closing break below that level, then I think we see a continuation lower down to the support zones down here, which come in at 116.95 down to 114.93. Obviously, yesterday we saw a pretty nasty looking engulfing candle, so seeing a continuation lower on that at the moment. If we look at cable, that had been trading quite nicely on the daily chart within this bullish channel, but yesterday we saw quite a nasty engulfing candle and a break of the channel, and also a break of this horizontal support that I had on the chart 37.59. So that doesn't look particularly great for cable, and suggests that we may see a deeper correction in that over the short term. And in terms of where we'd be looking at in terms of a downside target, my immediate target would be that 38.2% fib level, which comes in at 36.43, and then below that would be targeting a 50% fib level down at 134.58. So potential for a correction down to these sort of levels, maybe even lower down to sort of 3200. So not looking particularly great on that at the moment. If we take a look at these New Zealand dollar currencies, just to put it into perspective, the sell-off that we saw yesterday, this is the daily chart, and as you can see, this is a huge red candle that we posted yesterday. And although we haven't really moved anywhere today, forming a little bit of a doji, it's still very early in the session. So I think it may be a case of looking to sell into any strength on that one today. Similar situation for New Zealand dollar. Crudely drew on that sort of top formation yesterday, having seen that break of channel, obviously smashed through this 71.00 support level, and it looks like we might be heading down to these support levels down here around about 6700. So yeah, not looking particularly great there. If we look at the US dollar versus the Japanese yen, it continues to be underneath this trend channel. It's amazing how that continues to repel the price action, despite the fact that we've seen pretty decent dollar strength. So while below that, there is maybe potential for a corrective move lower, but still favour being long of the US dollar, but maybe not against the Japanese yen for now. And if we take a look at the dollar versus the Swiss franc, obviously we mentioned on the basket front that Swiss franc was looking really negative, and as you can see there, we've arguably seen a bit of a breakout of a flag pattern on that one. So I think we might see higher prices there in dollar Swiss in the very short term. So decent momentum on that today. I think if we can break above these highs that we posted on the 9th of March, around about 93.75, then that'll open up the upside for a bit more in the short term. That pretty much rounds it up on the FX side of bits and pieces that I was looking at. Anything to add, Steve, on that?
No, it all looks good, mate. I'm just looking for a gun to head challenge market now, and again, it feels a little bit like we're in the middle of things.
So have you found anything, or do you need me to waffle on give you a bit more time?
How did we do yesterday? Not very good.
No, not very good. We were stopped out on our trades, as we mentioned. I had a look at CAC on the back of that 8 o'clock candle and got suckered right in, and unfortunately stopped out. And Steve, you were short of sterling New Zealand dollar, so we was hoping for a bit of retracement on that, but there wasn't any. The New Zealand dollar continued to be weak throughout the session, and that resulted in a stop out for you as well. So obviously keen to get back on the horse today. There is quite a reasonable amount of information out today and data that need to be aware of. We've already had a decent cluster of information from France, Germany, and the Eurozone with their manufacturing numbers, all of which seem to be coming in better than expected. We've got UK manufacturing and services at 9:30. Then we've got US durable goods at 12:30. US manufacturing and services PMI at 145. And then crude inventories at 2:30. So lots going on, and more from Powell on his testimony as well. So plenty to keep us interested, and hopefully to give our trades a bit of a kick up the backside and get a bit of follow through on them. So did that give you enough time to find an idea?
Yeah, I'm going to sell indices, and I'm trying to think which one's the best to sell. So I'm going to go for FTSE this morning.
So is this a play on fading these 8
fading this
candles?
Sort of like 8 o'clock mumble around about the Ichimoku cloud is a classic level, and also on the 4-hour chart we're below the Ichimoku cloud as well, and it's just where to place the stop really. The stop, if you really should be giving it quite a bit of room, maybe up to 67.35, but that means that sort of like we're expecting a bigger sell-off, which I'm not really. So I will look at this as a bearish channel and then look to target a move lower down, which would run into this congestion area around about the 65.50 6600 level. So I'm going to leave it there. That's probably where we are, 66.85. We're going to put the stop in at 67.25, and shall I go for 3 to 1? No, it's FTSE. I'll go for 2 to 1 on FTSE, targeting a move to 66.05. So getting short of FTSE at 66.85, stop at 67.25 and target a move to 66.05.
Cool. I'm struggling, I've got to be honest. I mean, I've just ripped New Zealand dollar a new one on the daily charts, but I'm looking at it on the intraday.
Don't say you're going to fade it.
Oh, look at it though. It's posted a decent looking bullish turnaround candle today, sort of an outside, well, not quite an outside bar, but certainly an engulfing. After this sort of parabolic move to the downside, we've also got a bit of bullish divergence on the RSI. Obviously, this is super short-term charts I'm looking at here. It's an hour, but I'm wondering whether or not there is going to be a bit of a correction, and I think it would only be an opportunity to sell it again. But in the very short term, is there enough there for me? Let's go with it. So we're going to buy at 75.90. We're going to target 76.70 and stop loss at 75.59. 2.7R. Highly speculative. It doesn't look great on the longer term charts, but given the fact that it's had such a big sell-off in a short space of time, I think there may be a bit of room for a corrective bounce.
Yeah, nice.
Okay, so we've gone through the data. We've pretty much gone through it all, I think. So unless you've
Yep.
got anything else to add, Steve, we can wrap it up for the day and we can return in the morning.
Yep, lovely. Okay.
Cool. All right. Have a great day and catch you all tomorrow.
Cheers.
Cheers.